Hey, my name's Hervin, I'm a financial planner, and in this video we'll take a look at old age security. This is likely the second most common source of income for Canadian retirees. We'll talk about how it works, how you qualify for it, and how much you can expect from it. I'm creating a mini-series about the OAS, with the next video walking you through everything you need to know about the OAS clawback. In the third video, I'll also share tips and strategies to reduce or even eliminate clawback altogether, so be sure to watch those after watching this one. How does the OAS work? If you watched our video about the Canada Pension Plan, you would know that the CPP is based on your own contributions, which happens to be mandatory. On the other hand, the old age security is based not on your contributions, but rather it's taken from the general taxpayer fund, the tax revenue of the Canadian government. So how do you qualify for the OAS? The base OAS is determined by your residency. Since you've made no contributions, all you need to do to qualify is to be a Canadian resident for a long enough period of time. You must have lived in Canada for at least 10 years after the age of 18 prior to your application. To get the maximum amount, you need to have been here at least for 40 years. This may seem like it's semantics, but it's important. Like I said, lived. You don't need to be a Canadian citizen. This is a common misconception I've seen in the immigrant community groups that I'm in. So as long as you are a legal resident at the time of application and you can satisfy the 10-year residency minimum, you are entitled to at least a proportionate OAS benefit. This actually leads me to another misconception. The OAS residency requirement is not a one-time test before you get to 65. So let's look at an example. Let's say this year, Annie turned 65, but she's moved here from the Philippines 8 years ago. So really, she won't qualify right now. She won't meet this requirement until she turns 67. At that point, she would have enough years as residency. You can read more about case studies from the Canadian government website. We'll link that below. The Canadian government also has social security agreements with other countries who provide similar pension benefits. This means even if you don't have a full 10 years, if you participated in a pension scheme in the country you've lived in before, you may be able to use those years as periods of Canadian residency. Here's a list of countries with SSAs at the time of this recording, so be sure to check the link in the description to see if you can use any foreign pension participation to qualify for government benefits. How much can you receive from old age security payments? From January to March of 2023, the new maximum for OAS for those that are age 65 to 74 is $687.56 every month, or $8,250.72 annually. If you're 75 or older, it's $756.32, which is 10% more. This is then adjusted for inflation quarterly. Now that's the maximum. What you can get can be totally different. This can be adjusted up or down depending on your income or partial benefit calculations, and of course, when you decide to take the OAS. Lower income Canadians may also be eligible for OAS top-ups, such as the Guaranteed Income Supplement. That will be in a separate video. Higher income individuals in retirement, on the other hand, will be subjected to the OAS recovery tax, known as the clawback. We'll deep dive into the clawback in part 2 of this mini-series. That's for this video right here. When can you take out the OAS? Should you get it early, or should you wait until a little bit later? The soonest you can get the OAS payout is at 65. However, there is an option to defer the payments up to age 70. For every month after 65 that you qualify for OAS but you decide not to take it, you'll receive an enhancement of 0.6% up to 36% at 70. Based on the current maximum, this is $247 every month that you would be entitled to simply by waiting. If you take this out just because you're winging it, if you take the OAS early because you're winging it and you don't really have a plan, and you come to find out later that it actually made more sense for you to delay until you're 70, that's a $74,256 benefit that you are foregoing. If you don't need to take out OAS because you don't need it for your income in retirement, especially if you're deciding to work past 65, it may not make sense to take OAS as early as 65. However, if you believe that you have a shorter life expectancy, obviously it makes sense to juice out and get all these government benefits as soon as you are eligible for them. We'll address how OAS timing can actually impact clawback in video 3. How does the OAS clawback work? Whenever I bring up government pensions to my clients, they tend to spring towards the clawback discussion. They immediately want to know how to get the most out of the old age security because they've been led to believe that once you start to earn any level of income, you could lose it. That's simply not true. Based on the 2020 census, the average income for individuals 65 and older was $43,200, while the median income was even lower at $32,200 for that year. The current threshold, so the income limit you need to reach before you even worry about clawback, is $86,912 for 2023. That's really double the average income for most retirees. In fact, studies have shown that less than 5% of Canadians really have to worry about the OAS clawback. However, if you don't understand the mechanics of this, you can be in a situation where you're making some silly decisions that you end up triggering that clawback for a year or two as you enter retirement. So you still have to be careful about it. That's why I dedicate a separate video just breaking down OAS clawbacks, how they work and what could trigger them. And then we get into some strategies showing you how you can avoid clawback altogether. What happens to your OAS payments if you decide to retire or live outside of Canada during retirement? Well, you can still qualify for the OAS benefit while living outside of Canada if one of the two requirements apply to you. Requirement number one, or criteria number one, is that you need to have lived in Canada for at least 20 years after 18, or lived and worked in a country that had the Social Security agreement with Canada. That means the time you've lived there and worked there, plus the time you've lived in Canada, as long as they have an agreement, and that adds to 20 years, you could still qualify to receive the old age security benefit, and that could become portable. So it doesn't matter where you are, you can receive it. If you don't qualify to receive the old age security pension while outside of Canada, your pension payments will stop the moment you leave the country and you've been gone for more than 6 months. You can't collect OAS after that, and GIS is not paid outside of the country at all. Let's quickly talk about OAS and taxes. Your old age security pension payments are 100% taxable. Taxes are also not automatically deducted every month. You can ask that the federal taxes be deducted at source by signing into your My Service Canada account and making that election, or by filling up the form ISP 3520 OAS and dropping that form off at a Service Canada office near you. Though personally, I would prefer that you have a My Service Canada account and use that to log in. It's just making it easier for you to look at information. And also, if you decide to work with a professional, it's much easier for you to log in and share that information with them. Now, the OAS is a staple for retirement for most Canadians. Just like the CPP, if you're planning on working past 65, even if you're eligible, it may be worth deferring based on your personal situation if you don't need to use it. A lot of alarmists worry about the clawback without realizing what it really entails and what you can do to avoid it. And that's exactly why I created the follow-up videos. Both of them will dive deeper into that subject, and really, it's here to help you understand how you can maximize your cash flows in retirement. In video 2, we'll discuss the mechanics of the clawback, the timing for the adjustments, as well as some mistakes that you can end up making that could make the clawback worse, so watch out for that. In video 3, we'll give you the things you need to consider when you want to increase your retirement income by eliminating OAS clawback. Watch those videos right now.